friends, welcome to my channel Shakti Institute of Financial Markets. This is Avinash Volosu, Chartered Wealth Manager. Today I am back with a video on simple intraday trading trick using exponential moving average. Right? So a lot of us keep trying, lot of techniques, lot of tricks. We use lot of indicators and oscillators and try to generate income every month, right? Trading is an art, and you need to develop a system, a trading system, and you have to follow it consistently. You need to develop a strategy which suits you, and as per my opinion, the tricks or techniques which you are going to use should be very simple. See, there are many experts who might be telling you, I am using this trick, I am using that trick, or you need to use a combination of indicators and oscillators. See, there are hundreds of ways of or techniques which can be used in intradays. But see, if you will be successful in trading, if your trading tricks are simple. They should not be complicated. You should understand them properly. You need to know how to use them, and that trick should be used, or it should be it should be useful in every phase of the market, every situation of the market, right? And today I am going to discuss you with a very simple trick using exponential. You might be heard of exponential or moving averages. There are two types. One is simple and another one is exponential. In the previous video, I had discussed I had discussed about moving average for generating positional calls, that is delivery calls. And now I am back with this topic on intraday tricks using exponential. Exponential or simple day moving average are very simple and very useful indicators. The only thing is you need to know how to use it, right? So let's see how it works. See, for the very first thing what you have to do is, for intraday, you need to choose some stocks. You need to select some stocks which are going to be in momentum the very next day, right? So a bit of homework has to be done in the previous day. How to find out or how to filter intraday stocks once the market is open, that I am going to discuss in the some other video which I am going to post it in 1 or 2 days, right? So let us understand this trick first. Many people might be trading already, and those who are very new, they can start using this. See, what you have to do is you have to go on a 15-minute chart. See, intraday can be done using 5 minutes, 10 minutes or 15 minutes. Usually these 3-4 time frame charts are used for intraday. So this trick is going to be used on a 15-minute chart. So go to a 15-minute chart, and indicator you need to add moving average, that is a 10-day moving average, and that too or a closing one, right? So once you add this, you are going to get this line. This line is the 10-day moving average. See, the trick is you need to buy whenever there is a candle which is formed above the moving average, right? So this is BPCL which I have put, and this is the very first candle on 3rd of April. So 1, 2, 3, 4, 5, 6 candle has formed above this moving average, right? You need to buy here. What is this level? This is around 297, and we will see just this is within that trading day. What is the high which it has made? The high was 326. So from 297 to 325. What is the range? Right? So the range is somewhere around 25 to 28 rupees. On a 300 rupees stock, if you are getting 25, 28 rupees, it means 10% on that stock. Right? In intraday, this is a very big trend which can be an intraday player's jackpot trade. Right? So, using this trick, you can buy it here and sell it at this level or within that. You need to fix your risk reward ratio first, and as per the reward 1:2 or 1:3 ratio has to be fixed. One per one, if you are taking 1% risk, and at least 3% reward should be there. If you take 3% reward on a 300 rupees stock, then it comes around 9 to 10 rupees. Aram se we can book profits in this, right? Uh, we'll go to some other stock. You can go. Pharmaceutical was something like movement on that day. So we'll go to Arvindo Pharma. Right. So Arvindo Pharma, you can see here. Aurobindo Pharma. This is the first candle which was formed on 3rd of April. So 1, 2, 3, 4th candle has formed above the moving average. So here our buy is triggered. What is this level? 387. What was the high made? 411. So almost 23, 24 rupees from this level, right? And one more interesting thing here, see, you are going to buy it when the candle is formed above the moving average. You are going to go for a fresh short call when the candle is formed below this line. So in Aurobindo Pharma, you are bought here and sold within this high. Next, you are waiting for the second trade which can happen in this crypto. Let's see here. We can sell it at 391, 392, and the low made was 370. This is 330 candle, 315 to 350. So 3 to 315 is this last candle where you can see. You are selling it at 392 and you can buy it at around 380, 380. So 10 rupees. And how much is this? This is around 23 rupees. So 20 plus 10, 30 rupees in a single stock. Isn't it interesting? Very simple, very easy to use, and even very easy to understand also. We'll go to some other stock. Usually momentum stocks. We can go to Tata Steel. Tata Steel, yes, this is the first stock. So here it has already been formed below the moving average. So we are going to sell it here to 55, and no candle has been formed above the moving average, and the low made was 251. You are going to get a short trend here around 4-5 rupees. It's almost a flattish stock. We'll go to Axis Bank. Banks, private banks were under beating that day, and you can see here the first candle was here 3rd of April. It was down, formed below the moving average. If you had shorted here at 350 levels, and the low made was somewhere around 324. Wow, a 25 rupees profit on a 300 day stock, 300 rupees stock, right? So 10-15% you are getting on this. You can also check ICICI Bank. This is the first candle, I think. Yeah, this is the first candle which has been formed here at 298, and the low made was 280. The trick is very simple. You need to buy when the candle is formed above the 10-day moving average. You need to sell whenever a candle is formed below the moving average, right? And the profit booking and stop losses has to be kept and booked as per your risk appetite. Understood? This we have seen on the third. You can see any day. You can see here. This is on 1st of April, 315, and the low made was 308. Here also profit. We'll see the next day, that is the previous day, 31.3. I think the candle of 31.3 starting is somewhere around here. Yes, and this is 31.3. It has formed above, so you are going to buy it here 322, and the high made is 335. Right? Isn't it interesting? It will definitely work in any sort of market except when the volatility is too high. Right? It's a very simple trick. You can use it, try using it, and do definitely share with me the results. I'll be again back with some new videos, interesting one, informative ones. Right? Fine, guys. Thank you. See you soon. I hope you have understood the trick, how to use it and how to apply it. I will be coming back with some new concepts. Subscribe my videos, subscribe my channel, share my videos also. And those who are interested to learn technical and fundamental analysis and trading techniques, trading strategies, then please call the below mentioned numbers. Thank you. All the best for tomorrow's trade.